Hey guys, welcome to Learn and Trade Forex. In today's episode, we're going to uncover the secrets of buy and sell stop orders and their crucial role in confirming trade analysis. So whether you're just starting out or seeking to refine your strategies, we've got you covered with practical tips, real-world examples, and straightforward guidelines. So get ready to transform your Forex trading decisions and elevate your market success. Let's do it. Now, the first thing we would like to ask ourselves is, what's the purpose of stop orders? A stop order in Forex trading is an instruction to buy or sell a currency pair at a specified price, known as a stop price. This order type is used to trigger a trade only when the market reaches a certain level, which can be higher or lower than the current market price. Depending on the strategy that you trade, price can either be higher or lower than the current market price when you decide to enter the trade. Now, the first thing we're going to talk about is a buy stop order. Now, a buy stop order is placed above the current market price and will be executed only if the price rises to the stop price, which is the entry price. It is used when a trader anticipates that the price will continue to increase after reaching a certain level. Here's the example of a buy stop order. So this red line right here is current price. This line here, this shorter red line, it would be the entry price. This is where I want to enter the trade because I anticipate price to continue to go up, but I want the market to prove me right. So I want the market to go up and kind of like trade through this entry price. Okay, let me show you guys a real world example because I just took a trade earlier this week, a buy stop trade that went for 140 pips. So let me show you guys this. No, it was 170 pips. Let me show you guys this trade. So anyone knows if you trade with MT4, you can drag the trade onto the chart, and you could MT4 or MT5, you can drag the trade onto the chart, and you can see the actual trade, what played out. So this line right here is the trade. It's the trade. This dotted line here. I'm gonna go down to a lower time frame, but I'm gonna show you guys what I was looking at and the reason for me taking this trade. So everyone knows, if you follow Learn and Trade Forex, that I get my signals from the daily time frame. Okay. So let me show you guys. Alrighty. So this is my signal candle that that gave me the long trade. I entered the order. You saw it on the daily. It'll be an entry right here. After the break of that candle, that's a buy stop order, and that was my initial take profit. Price didn't make it that high, but I closed out at 170 pips. I actually did a video. I have a video in the Facebook group that shows this entire trade. But now let me break it down. Let me go down to a lower time frame so you can see the entry a little bit easier, and it'll give it a really good example of a buy stop order. Okay, let's go down to the 1 hour. You can see it really clear on the 1 hour time frame. So let me back up a little bit to find the trade again. Here it is right here. That's that dotted line. All right. So my entry was here. That was my entry where this dotted line starts. My stop loss was somewhere down here because it would have been at this swing low. There it is right there. That little red speck right there is my stop loss. You can hardly see it, but it's right there. And my take profit, my TP, was originally right here. This little blue speck is my take profit. Of course, I closed out early, but here's what I mean. I saw price pulling back right here. And I had, from the analysis that I did on the trade when I did my top-down approach, I kind of figured price wanted to continue to go a little bit higher, right? Wanted to go higher. Now, so what I did was, you can think it wants to go higher, but you can't control the market. So if price would have went higher, I placed the order right here to get in. So if price breaks this high right here, then put me into the trade for a 1-to-1 take profit. Okay. So price broke here. It put me into the trade, and it went up I got 170 pips out of the trade, and then I closed out because I started seeing this consolidation right here where price was beginning to get weaker. So instead of having price reverse and giving my profits back to the market, I went ahead and closed out. But that's a great example of a buy stop order. And what makes this a good example was I did the analysis on this trade at about 8 p.m. at night. This trade didn't execute maybe, I don't know, let's see, 5, 6, 7, 8, 9. This trade executed around 10 p.m. I was sleeping. I gotta go to bed early. So I was sleeping around 10 p.m. This trade executed, put me into the trade when I woke up to go to the gym around maybe 4 a.m. the next morning, 4 or 5 a.m. the next morning. I saw I was in profit. I saw price begin to get weaker, so I closed the position. I may have closed it when I came back from the gym. Yeah, it looks like these are some late candles right here. But nevertheless, this is an excellent buy stop order. Okay. Now let's talk about a sell stop order. Alrighty, so now let's discuss sell stop orders. So sell stop orders are essentially the opposite of what buy stop orders are. So a sell stop order is placed below the current market price and will be activated only if the market falls to a price only if the market price falls to the stop price. So the price has to continue to fall in order to put us into this trade. Traders use this when they expect the price to continue decreasing after hitting a specified level. So you can observe that right here. So this was the current price. And if I thought price was going to continue to fall, I would put a stop order, a sell stop order right here and allow price to just walk me into this trade and confirm my analysis. Now, here's the cool thing about using these types of orders. If your analysis is wrong, let's say for instance, price continues to go up, then essentially if price never breaks the low of this red candle here, then guess what? No harm, no foul. You're never put into the order never executes, it never triggers. So essentially, you don't have to take a loss on the market touching the order and pulling back on you, right? Although that does happen sometimes, but when you're placing stop orders, you mainly want price to confirm that you're right in your analysis. And that is why I love these types of orders, because a lot of times when I'm wrong in my analysis, my orders are never triggered. All right. So that's the benefit. And let's look at the charts and take a look at, let's go to the charts and take a look at a potential sell stop order. Now, I don't have a recent live trade for a sell stop order, but I'm going to explain to you. And if I explain it this way, it's probably a little bit easier for you to understand, actually. So let me show you guys what a potential sell stop order would look like. So if we notice this price going down, it's beginning to retrace. Here is what a sell stop order would look like. There's one here, 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 at least what I would have taken in the market. Right? Remember, this is a daily time frame, right? So let's say, for instance, we get this signal right here. That's a clear signal to go short. Why is that a clear signal to go short? The market is going down. Price is beginning to pull back a little bit to a level of structure. Pull back into this level of structure right here. And we anticipate price to continue to keep falling. But here's the order. So if this is the day that gave you the signal. So this would be actually 5 p.m. or the end of the trading day wherever you are, right? So this is the actual day you would take the trade on right here. So my sell stop potential entry would have been here because I want to sell this pair. Stop loss somewhere around here. Then I would simply drop down to the 4-hour time frame. Look for the trade. Look for wherever I'm at. I have to find it. Let me go back a little bit. I can find it. Give me a second, guys. Maybe I went back too far into the chart. We may have to select another example. Let's try that again. I didn't think I went back that far. Okay, that's okay. We'll find another pair for another example. That's okay. Let's go with pound NZD. Oh, did I have it? Oh, there it is right here. Let's go with pound. Let's go with pound JPY. Okay, here's a good example. Well, let's move this up some. I want to find something that's going down. Okay, here we go. Let's use this. Here we go, right here. Okay. All right, so back to the example, right? This would be, man, that would have tagged everyone out. Look at that. Talk about having a stop hunt. That's a stop hunt. Okay, back to what we're doing. Okay, so here is the candle that would have gave us the signal to go short right here. So potential stop loss, sell stop order under this level of support. This is a good one because it has to break this level of support for me to take the trade. Okay. So as soon as price, it kind of just, pushed around or just played around in this area for a couple days, but then price broke that level right there. So here we go down to the 4 hour. There it is right there. So we would just wait. We would anticipate price breaking this level. It took a few days, but once price broke the level, it came back. We was in a little negative equity there. It happens sometimes because this isn't a pullback order. It's a more conservative trade. It's a stop order. So it come back, but eventually we got to our 1-to-1. It took us about a week to get there, but we got there. 142 pips, easy money, stress-free trading. You just let your trades play out. Okay, so that's an example of a sell stop order right there. All right, so let's continue. Now let's talk about the benefits of stop orders, whether it's a buy stop or sell stop order. Now, the first benefit is it allows you to automate your trading, right? Stop orders allow traders to set predetermined entry or exit points for trades. This automation means traders do not need to consistently monitor the market. The trade will execute once the conditions are met. And that's what I did with that buy stop order, guys. I set my target for the trade. I set my entry, my stop loss, and I had my 1-to-1 target already preset, and I went to bed. If I was wrong in my analysis, then more than likely the trade would have never executed. I would have woke up the next day and saw price fall. No harm, no foul. We come up with a different strategy after that. But being that I was correct in my analysis, the trade executed and the follow through was damn near flawless. Okay. All right. So speaking of like being right in your analysis, what stop orders do, they also allow you to get more confirmation when it comes to your analysis. So traders often use stop orders as a method to confirm their market analysis. By setting a buy or stop order, traders express confidence that the price will continue rising after reaching a certain point, thus confirming the bullish or bearish market. Okay, so it allows you to basically what it's saying is that the market has proven you correctly, right? So my analysis was that price wanted to go up. I set the stop because the trade executed. I was correct in my analysis most of the time. So those are the benefits between for stop orders. Okay, so in conclusion, guys, placing stop orders strategically is more art than a science, right? Requiring a balance between analytical skills and discipline, risk management. The goal is to maximize potential profits while minimizing losses, always being aware that no strategy guarantees success in every trade. Regular practice, ongoing learning, and experience are key to mastering the aspects of Forex trading.